Hello. Just Clark coming at you with Go Broke Investing, quick clips. Today we're going to be talking about Facebook. So we're in earnings season. So we have the financial media reporting on the earnings reports, fourth quarter earnings reports of these companies. So we have this, let's get right to it, from Facebook. They have their earnings that they reported, and as of yesterday, right, they had a nice little bump when they announced that they beat expectations. So looking at the numbers, revenue has been up, their earnings $3.22 a share versus $3.19 a share, right? $29 billion versus $29.57 billion expected, right? Not too far off. Daily active users. So, a company like Facebook, a lot of their revenue is generated by how many users, Wall Street, they're always looking at how many users do they have. Daily active users, monthly active users. And then with that, the ad revenue that they're generating, Facebook, one of their main revenue streams is ad revenue. So that is impacted by how many eyeballs is on their platform on a daily and a monthly basis. So there's been a lot of news about them in the media, a lot of negative news. So one of the things that this article references as well is Mark Zuckerberg pretty much saying that it's a smear campaign, that all this negative news is making Facebook look bad in the press and out in the public. We've been a lot of accusations thrown at Facebook, practices that they do, illegally using, improperly using, the public's data that they have, that they mine that data and they use it inappropriately. Recently, there was a discussion about what happened with Instagram and the practices that they have, their internal reports from their own employees saying that Facebook knows that Instagram can hurt younger users in their mental development and how they perceive themselves, looking at pictures and their personal development and self confidence, and not doing anything to change their practices to make it safer for younger teenagers and that kind of thing. So basically it kind of seems that Facebook can't do no wrong in the eyes of investors. The big question that analysts are looking at is, how far can Facebook go? How much can they continue to appreciate in value, right? So recently, again, Facebook announced that they're building out their metaverse. One of the things that they announced yesterday is that they have their reality labs that they will be breaking off as a separate entity from the larger Facebook company so that it can be independent and have its own revenue stream. Right, so they announced that they will be hiring a large number of people put into their UK offices to help build out the metaverse. So that, again, analysts have been salivating over that. What are the projections of their potential revenues when they're able to build out this, very impressive infrastructure known as the metaverse, where you're going to have augmented reality, virtual reality interacting with regular world, and then a company like Facebook with billions and billions of users being able to access that. So again, when a company is able to show that they can create another revenue stream, there are no projections at this time on what that can be worth, what kind of money that will bring in for Facebook. But again, they keep innovating. They're showing that they're trying to stay on the pulse of the trending technology. So their stock also reflects that. So as I mentioned, right, there was a slight bump in their stock yesterday. If you look over at the annual chart of their stock, it has been trending up. So again, some people see the company as a mature company. Is it one that's going to keep trending? Is it one where you're going to get continuous growth from? Right? Nothing has seemed to phase it. The pandemic hasn't phased it. This negative press hasn't phased it. They keep moving right along. The politicians keep saying they're going to rein in on Facebook. They're going to break up Facebook, right? So we'll keep watching, and then we'll keep commenting and letting you know what's going on.